Welcome back to Candlestick Signals for today's market, August 7th, 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to unpack. From bullish engulfing patterns in tech giants to doji indecision in consumer staples, today's session has been nothing short of a technical analyst's dream. So, let's dive into the charts and decode what the market is really telling us. U.S. equity markets displayed a mixed performance today, with major indices reflecting a cautious mood among investors. Trading volumes spiked in the early session, particularly within high-cap sectors like technology, healthcare, and energy. The S&P 500 hovered near recent support levels, while the NASDAQ registered a slight gain, signaling selective buying in growth-heavy industries. Let's start with the technology sector, which has been the star performer of the day. The sector saw an impressive gain of 3.2%, translating to a market capitalization change of $42 billion. Software and IT services sub-industries were the main contributors to the sector's growth, with increases of around 3.5% each. Meanwhile, hardware and storage had a daily return of approximately 2.8%. What's particularly interesting is the candlestick formation we're seeing in the technology sector. Today, the sector formed a bullish continuation candlestick, which is a positive candlestick pattern that shows the current uptrend is likely to continue. This pattern suggests that buyers are still in control and are pushing the price higher. In fact, the technology sector has shown strong momentum for quite some time. And it's possible that this positive trend will continue in the near future with the potential for new highs. Diving deeper into individual stocks, we observed bullish engulfing candles in leading tech stocks, confirming underlying buying strength. Apple AAPL, Microsoft MSFT, and NVIDIA NVDA all displayed strong bullish engulfing setups, suggesting possible breakouts. These patterns formed during the morning session, with prices reaching their daily highs around 11:30 a.m. Eastern Time. Moving on to the healthcare sector, we saw a moderate growth of 2.1%. Equating to a market capitalization change of $18 billion. The sector's performance was bolstered by pharmaceutical and biotechnology stocks. Interestingly, we observed hammer patterns forming in key players like Johnson & Johnson, J&J, and Pfizer PFE, signaling buyer resilience at lower price levels. These patterns emerged in the early afternoon, with the lowest prices recorded around 1:15 p.m. before a strong recovery into the close. The energy sector, however, painted a different picture. While the sector as a whole saw a modest gain of 0.8%, translating to a market capitalization change of $6 billion, individual stocks showed signs of caution. ExxonMobil XOM and Chevron CVX featured bearish reversal candles, cautioning traders of a potential short-term pullback. These bearish signals formed late in the trading day, with prices peaking around 3 p.m. before retreating. In the basic materials sector, we observed moderate growth, with selected materials stock leaders like Newmont and Agnico Eagle Mines posting strong gains. The overall sector market cap moved positively within the day, reflecting ongoing demand in core commodities and industrial resources. The sector saw a 1.5% increase, translating to a market capitalization change of $11 billion. A bullish engulfing pattern formed around midday, indicating a potential reversal of the previous downtrend. The consumer discretionary sector presented an interesting case of market indecision. Amazon AMZN, a heavyweight in this sector, established a doji candlestick pattern, painting a near-term picture of uncertainty. This doji formed during a period of choppy trading between 2 p.m. and 3:30 p.m., reflecting the tug-of-war between buyers and sellers. Looking at the broader market, today's session featured several prominent candlestick formations that provide valuable insights into market sentiment. Doji patterns were observed in consumer staples and financials, indicating indecision and potential reversal. These patterns were particularly prevalent during the mid-morning trading hours, between 10:30 a.m. and 11:45 a.m. Long-legged shadows and industrial giants signal volatile, intraday sentiment, with swings driven by macroeconomic news and sector rotation. These volatile movements were most pronounced during the first hour of trading. From 9:30 a.m. to 10:30 a.m., traders digested overnight news and positioned themselves for the day ahead. From a technical perspective, momentum indicators point to consolidation across most sectors, with RSI readings near neutral and MACD lines converging. Support and resistance levels remain tight, particularly in blue-chip stocks. as institutional investors hesitated on initiating large positions. Volume analysis underscores accumulation phases in select large caps, hinting at underlying bullish sentiment for the upcoming weeks. Market sentiment remains cautiously optimistic, with traders acknowledging recent economic data and Federal Reserve positions. Technical setup suggests short-term volatility with potential for sector-specific rallies. Investors should look for momentum in technology and healthcare while keeping a defensive approach in energy. To summarize the key sector movements and their associated candlestick signals, the technology sector led the charge with a 3.2% gain and a bullish continuation pattern, suggesting further upside potential. Keep an eye on AAPL, MSFT, and NVDA for potential breakouts. Healthcare followed with a 2.1% increase, featuring hammer patterns in JNJ and PFE, indicating strong support at current levels. The energy sector, despite a modest 0.8% gain, showed bearish reversal candles in major players like XOM and CVX, warranting caution in the short term. Basic materials saw a 1.5% uptick, with a bullish engulfing pattern hinting at a possible trend reversal. Consumer discretionary, exemplified by AMZN's doji, reflects market uncertainty and the need for careful positioning. In conclusion, August 7, 2025, presented a day of mixed signals across the U.S. equity landscape. Major candlestick formations revealed significant activity in tech and healthcare sectors by market capitalization, reflecting shifts in sentiment and positioning. The bullish continuation pattern in technology, coupled with hammer formations in healthcare, suggests potential strength in these areas. However, the bearish signals in energy and the indecision in consumer discretionary underscore the importance of a selective approach. Traders and investors should lean into current technical structures, monitor sector rotation, and anticipate increased volatility as summer trading continues. Pay close attention to the bullish setups in technology stocks, while remaining cautious in sectors showing bearish or indecisive patterns. The coming days may provide clarity on whether these candlestick signals will lead to sustained trends, or if they merely short-term fluctuations. As we move forward, it's crucial to adjust portfolio strategies accordingly to maximize opportunities while managing risk. Keep a close eye on volume patterns, support and resistance levels, and any emerging candlestick formations that may signal shifts in market dynamics. Remember, in the world of technical analysis, today's candlesticks are tomorrow's trends. Stay vigilant, stay informed, and happy trading. Thank you so much for watching. I hope this video helped you out. We'll see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.